Good morning, I'm Dan Hussey with Zaner Ag Hedge bringing you today's market update for July 6, 2022. Soybean futures have tested the psychological $13 beans in the teens threshold as support in the November contract and their lowest level since January 25th, erasing the entirety of 2022's gains. A stronger U.S. dollar is weighing on U.S. export markets, with Chinese buyers swapping out U.S. beans for Brazilian shipments as the recent harvest has made South American supplies much cheaper. Talk that at least 5 cargoes that initially were booked for the U.S. as shipments in August will instead load in South America, added to our bearish tone. Chinese daily and soybeans were down 1.2% overnight, with Malaysian palm oil down 2.8%. Yesterday, the USDA announced the weekly crop conditions and progress report after the bell. Traders expected to see soybean crop conditions near 64% good to excellent as compared with 65% last week. Soybeans rated good to excellent as of July 3rd was down 2% at 63% good to excellent, with poor to very poor up 1% at 9%. Current good to excellent is down 1% versus the 10-year average, and poor to very poor is unchanged. Of the 18 reported states, 4 reported better, 13 worse, and 1 unchanged. Soybean export inspections for the week ending June 30th came in at 354,000 metric tons. Cumulative inspections year to date are 51 million metric tons, which is 10.2% below this time last year. This is 87.6% of the USDA forecast for the 21-22 marketing year versus a 5-year average of around 86% at this time. August soybeans trading 14.49 and a quarter, up 9 3/4 cents, with November trading 13.24 even, up 8 cents on the day. Corn futures have broken below $6 in both the September and December contracts, and like soybeans, have traded to the lowest level since January 25th, erasing all of 2022's gains. Chinese daily and corn was trading down 1.15%. Scattered rains across Nebraska, Iowa, Illinois, Indiana, and Ohio in the next few days suggest a lack of stress for much of the Corn Belt for pollination, although from what I can gather, we're still 2 to 3 weeks away, and those forecasts are, of course, liable to change. In addition, the 6 to 10 day forecast models show near normal temperatures and normal to below normal precipitation for much of the Corn Belt. The 18 to 14 day forecast models show below normal temperatures and below normal precipitation. Both forecasts likely reasons much of the weather premium has been taken out of the market. For the weekly crop progress report, traders expected to see corn crops condition near 65% good to excellent as compared with 67% last week. Corn rated good to excellent as of July 3rd was down 3% at 64%, and poor to very poor was up 1% at 9%. Current good to excellent is down 3% versus their 10-year average, and poor to very poor unchanged. Corn export inspections for the week ending June 30th came in at 676,000 metric tons. Cumulative inspections year to date are at 48 million metric tons, which is 17.5% below last year. This is 77.3% of the USDA's forecast for the current marketing year versus a 5-year average of around 80% at this time. September corn trading 5.92 and a quarter, down a quarter of a penny on the day, and December beans trading 5.77 and a half, down a penny. In wheat markets, September wheat has continued its decline as well, erasing all of the Ukraine-Russian panic buying and as well as trading to its lowest level since February 18th. While the broader inflation trade has begun to unwind, early leaders like wheat are now leading the commodities to the downside. For the weekly crop progress report, traders expected to see harvest for winter wheat near 57% complete compared to 41% last week. Winter wheat harvested as of July 3rd was up 13% at 54% complete. This is up 11% versus last year and up 2% versus our 10-year average. Winter wheat crop conditions were expected near 30% good to excellent, came in at 31%, with poor to very poor unchanged at 43%. Current good to excellent is 16% versus the 10-year average, and poor to very poor is up 19% versus that 10-year average. Spring wheat crop conditions expected near 59% good to excellent, came as compared with 59% last week. Wheat export inspections for the week ending June 30th came in at 111,000 metric tons. Cumulative inspections year to date are 1.4 million metric tons, which is 23.9% below last year and is only 6.9% of the USDA forecast. Chicago wheat trading in the September contract at 8.11 and 3/4, up 4 3/4 cents. KC hard red winter trading at 8.63 even, up a penny, with Minneapolis spring wheat trading at 8.92, up 2 cents on the day. In our cattle markets, August cattle closed sharply lower in the session after a choppy early trading. The market managed to take out Friday's lows, however, before recovering somewhat here in today's trade. The USDA box beef cutout closed 84 cents higher at $264.66. That was down from $267.14 last week. Cash live cattle has been quiet here this week, and on Tuesday there were no trades reported. The 5-area weighted average steer price index as of last week was at 146.15, up from 144.55 the previous week and 123.89 a year ago. The USDA also sees beef production down 430 million pounds from the third quarter to fourth quarter of this year, as compared with an increase of 127 million pounds last year. This will be the largest decline since 2008, and the drop in production may provide some support in the near term. August live cattle trading 133.32 half, up a half a point on the day, with August feeders trading 172.90, up 0.2 of a point on the day. And in our hog markets, August hogs experienced choppy and two-sided trade early in the session yesterday, but closed sharply higher on the session after news that China is considering releasing pork from its state reserves after a massive rally of 5.6% in Chinese pork prices. And yesterday, after that news, the market fell 5% overnight. The USDA pork cutout released after the close yesterday came in at $112.82, up a whopping $5.21 from Monday, and up from $103.83 last week. This is the highest the cutout has been since February 17th. July lean hogs trading 114.10, up 1.95 on the day, with August hogs trading 108.92 half, up 2.95 on the day. This has been your morning market update brought to you by Zaner Ag Hedge. For all things trading and commodity risk management related, a member of the Zaner team is available to discuss trade plans that are right for you. Give us a call at 312-277-0110. That's 312-277-0110, or find us on the web at zaner.com. You can also join me daily for our Strategy of the Day live streams right here on Facebook, or sign up in the links below to receive our free Zaner Daily newsletter to get our entire team's analysis of current market conditions. And do join me every Thursday at 2 p.m. Central for the free Strategy of the Week webinar, where I cover my own actual trading strategies and the analysis behind them for all your risk management and trading plan needs. Sign-up links included in the information section and comment sections below. Have a great day, everyone, and I'll be back with you as price action develops.